Hey everyone, welcome to CoveredCall ETF Investing. I'm Jordan, and this is your central hub for deep CoveredCall ETF data. And in today's video, we're going to be looking at a snippet from a Google Sheet I created called the CoveredCall ETF ALLSTAR Tracker, a place where you can have all of your Canadian and US listed CoveredCall ETFs filtered in one location to explore performances, 3-month average volume, yields, dividend streaks, distribution changes, taxes. There's a lot there, and that can all be picked up on my Patreon page, which will be in the description below, or in the pinned comment section, the very first comment that you'll see. So let's check out CoveredCall ETF assets under management right now. We'll talk about AUM changes in the month of May. We're going to start with, we'll do both the Canadian side and the American side of things. Now AUM, the reason I like to track AUM, I like to track it for the reason that I can see what funds are healthy, they're growing. It gives me a good indicator how the entire CoveredCall ETF landscape is doing overall. See, I'll show you what I mean. Just by a quick pure visual, I can see that the monthly change, there was a lot of inflows into the CoveredCall ETF space across the American and Canadian markets. Yeah, there were some detractors, but we're seeing, I would say, that there's still more growth than there was outflows, more inflows than outflows. And just year-to-date change, you can see these big jumps in AUM. Now, I would say this isn't the be-all, end-all. What you can do is, if you really want to, if you have this tracker in hand, I mean, you could, add it all up. You can head down to the bottom here, get a sum. You can get an average. And there's just ways of actually seeing how the overall changes month over month are. But anyway, I'll leave that to you all to do that. If you want, pick it up in the Patreon, which will be in the description below. So there again, once as I was saying, year-to-date change, everything is pretty much in the green. Yeah, we see some red, but overall, the whole CoveredCall ETF space looks pretty healthy. Again, if you want more detailed view of that, just add, what you can do is just separate, say, the month of May, all the gainers in May, add all that up, highlight it all, and then highlight all the red in the particular month, and then you'll get that difference between just inflows and outflows. Okay, so let's maybe kind of go back to, what we'll do is, we'll filter this by fund managers. Okay, and we'll kind of just have a look on some of the increases. Now, I'm going to maybe just go to more of what I consider the more interesting funds. I'm going to skip over BMO because most of their funds, again, are kind of under that 10% range. But BMO, just so you know, in Canada, they do have the highest AUM with a couple of funds in the $1 billion range. And I want to say there's probably, maybe Harvest has $1 billion fund. Evolve also might have $1 billion fund as well. I'm for sure Harvest does. Anyway, let's get to that. So we'll kind of skip over BMO. With Brompton, I like to look at BMAX. We can see that BMAX has been slowly edging upwards, which I like to see. That's a fund I hold. So good to see. Let's see what its monthly change is, 5.33% with a year-to-date change of 11.89%. We'll skip over CI once again. It's just with their variable distributions and only paying quarterly. The community, I would say, doesn't necessarily talk about CI as much. Now, that could change if we just, shake up the strategy a little bit. I would love to talk about CI more, but because of that alone, is there anything notable in here? NXF. Actually, you know what? On the last tracker, I did talk about the fact that NXF lost a bunch of AUM. Started the year with $241 million and year-to-date down 34%. CI, You're getting competition from Hamilton with EMAX. You're getting competition from which I think is the king of energy cover call ETFs here in Canada by Horizons, ENCC and ENCL with their giant distributions, 18%. Say what you will about like a fund like that. ENCL in my portfolio continues to be a top performer. It usually switches between HTAE from a technology fund from Harvest and ENCL. It always seems to be within the top. Now it's cyclical, it's going to bounce around. So I expect the energy sector to do just that, just bounce around. But man, that is a catastrophic loss. So, and NXF has been around for a long time, guys, but just know that there are other energy funds on the Canadian market that are popping up that I would say are more efficient, pay you more often, and are more stable, which is what I'm not a fan of with NXF. So anyway, keep tabs on that, but yikes, down 34%. Let's see, Defiance. These funds haven't been around as long, but you know what? The Russell 2000s, to my surprise, is the one fund by Defiance that's actually gaining AUM versus the other funds, JEPY and QQQY, slightly declined. I think they came out of the gate strong. They were in my opinion, the first cover call ETFs. Well, I shouldn't say that. They were the first, I would say, income strategies that had higher yields, that were more index based. They're the first ones that I saw that were index based, that weren't the sort of single stock cover call ETFs that you've seen from YieldMax. So, probably started hot and kind of slightly declining. Again, we just need more months to really see and get a better handle on how these funds will perform over time. But it would be interesting to see if this right here was their watermark, which was their, just intro into the space. Let's see, what do we got by Evolve? There are funds in here that I like to keep tabs on. We got Bank, which is another fund that I want to own in my taxable account starting next year. Year to date, up 67.12%, which is just awesome to see. More money piling into Bank, up 14.03% this month alone. Wow, basically $141 million all the way up to $160 million. This fund continues to grow, continues to pace. It's a leveraged fund on the banks and also I think for sort of financial institutions like insurance and other sort of financial companies, services companies, I should say. So Bank doing really well. Base is kind of my dark horse sort of fund. I'd like to invest in Base. It's I would say of the mining materials sector, this is the fund I'd pick. But its yield I would like it to just get over that 10% range. I think as of right now it's about 9. So once it gets to 9.5, more interesting. There is a chance I could pick it up at 9.5, but ideally at 10. But it's actually seen a bit of up 1% since the start of the year. So it's, again, with mining and materials, it's cyclical. You're going to see massive swings with a fund like Base, but for this whole transition we want to do with green energy, if you're on that camp, Base will be good in that regard. If you're someone who's more maybe conventional thinking, we still need rare earth minerals for nuclear and electric cars and various other innovations that continue to hit the market that needs things like cobalt and nickel and lithium. So anyway, Base is another kind of decent one to keep an eye on. Let's see, what other kind of, let's see, ESPX, that's probably a notable fund to just talk about. Starting the year with $76 million in AUM, now up to 119. Really solid on that stance. Same with ETSX. So as these funds, this tracks the S&P 500. This one tracks the TSX 60. I believe these are the only Canadian covered call ETFs that outright have in their fund name, S&P 500, the TSX 60. But both funds have been really picking up steam, and I can see on social media and comments on my own pages that these funds are, I think, becoming a lot more, they're just being talked about a lot more, especially if you are someone who's not into having a leverage component, then ESPX and ETSX could really be solid alternatives. So beginning of the year, 24 million up to 39 million with ETSX, and a big, massive jump with almost 21% from 32 up to 39. I've been saying for a year, I think ESPX could be a flagship fund for Evolve, but I think that title might just be going to Bank. Not I can't remember if Bank was around early last year. It might have been. It might have been around last year, but anyways, before that I was kind of saying ESPX. So I would say for Evolve ETFs, Bank, probably their flagship, then ESPX, and probably ETSX to take bronze in that regard. Now they got some other like bigger funds, but I just feel like those are the funds that drum up the most discussion. Especially with Life, right? You can see Life, it's basically kind of hung in there, not growing, not declining. How could I forget this? QQQY by Evolve, started with 13 million and is up to, it's seen a 50% increase. You know what? This fund could certainly be in that flagship conversation. It's just newer, so it just needs a little bit more time to evolve, see what happens with it. But anyway, AUM is tracking really well, and its yield, its distribution increases, I want to say from March to April was a massive jump. I want to say it's at least 15% plus, probably the highest yielding technology fund in Canada. Global X in the States, there now Horizons ETFs is now Global X Canada. I'll make that distinction in future tracker videos. But what's there really to talk about here? I find that a lot of the Global X funds on the American side are kind of outdated. I did invest in XYLD to start my own journey with CoveredCall ETFs. I held it for about a year, but sold it off. Bigger funds, of course, we got a couple over $1 billion. QYLD was, for in 2022, I feel like that's all people talked about was QYLD. But anyway, its AUM has kind of stayed the same. Same with XYLD, kind of just hanging around in the same spot. RYLD, same, like basically not much of a change. It's just the smaller funds that see the bigger increases, right? Like TYLG, just a pure technology fund. Anyway, so in my opinion, not much more to talk about there. Goldman Sachs, these funds are gaining a lot more popularity since March. These, like the NASDAQ 100 fund and their S&P 500, their NASDAQ 100 fund and S&P 500 fund up big with 44% and 60% respectively. I think with these Goldman Sachs funds, they're easy, in my opinion, a lot easier to understand. They own their underlying assets, just kind of plain Jane CoveredCall ETFs with plain strategies. I actually like that. The simpler strategy is, I just think there's less room for a fund manager to do some funky stuff with the funds when the strategies are fairly simple. So good to see that from Goldman Sachs, a couple of newer funds. Then of course we come to Hamilton ETFs. All their funds are doing really well, gaining like crazy, especially their newer sector funds like AMAX, right, up from 73 million to 101 million. Again, just more growth with EMAX and FMAX and LMAX. Those are the four to round out sort of their newer sector ETFs that they've put inside HDIV and HYLD. Let's check out HYLD. This is, in my opinion, I've been saying this for a year, definitely. It's the darling CoveredCall ETF of Canada. And it's seen a 10% increase, which is good to see. It is a older fund in comparison to so many newer funds that have come up since in 2023, here into 2024, maybe later into 2022 as well, when I found that the industry was really starting to just hit its stride with more funds coming online. HYLD, weirdly enough, is maybe kind of more of the old dog on the block with some of these funds that have come out in the last 3 years or so. But gaining really well with 10% year-to-date change, and even HDIV 3.5% increase year-to-date. Which, you know what, even though it saw a slight decline in its monthly change, these funds, again, being a little bit older, you're not going to see explosive growth with these funds like you will with, say, even QMAX and SMAX, a little bit older than those other four sector funds that we talked about, gaining a lot of steam. And I mean, if you're interested in the AMAX, EMAX, FMAX, and QMAX, like all of these funds, you can pick it up inside HYLD and HDIV, both solid funds that I own. And then we have UMAX, which is a utilities fund I really like. It's down a bit performance-wise year-to-date, maybe 5 or 6%. But year-to-date, it's up 36%, month-over-month, up 5.24%, up to $250 million. Good to see that it crossed that threshold, but continues to gain every month. And anyway, with 14.5%, good opportunity to pick up right now. Hopefully you liked that small snippet of the CoveredCall ETF ALLSTAR tracker. There is a fully 1.5 hour unedited version over on my Patreon, which will be in the description below, so you can check it out there. Some other features in the Patreon are you can actually have access to the tracker yourself. There's going to be also live meetups every single month that you can be a part of. Get to ask me all of your questions in a small group setting, especially while the Patreon community is fairly small. That's something I'll have the ability to do. So come on over there, check out the full version of this video. Or if not, then just wait for just smaller releases throughout each week, and continue to learn about CoveredCall ETFs in more bite-sized chunks. So with that being said, hit all the buttons to the like and subscribe variety, and I'll see you all in the next video.